Good evening. Today is March 23rd, 2016. I thought at this juncture we might review some of the major indexes and some of the supporting theories that provide information as to what the indexes may do in terms of direction. Right now what we're seeing is the general indexes, the Dow, S&P, NASDAQ, and so forth, appear to have reached a point of resistance. The resistance is actually above where most technicians would expect it to be. In other words, the last couple of days the market was very strong because it was perceived to have taken out the line, which would be signified by this arrow here. If I can just get this straightened out for us here, that trend going in this direction. So you see how it shows that the actual market had climbed above that line, but only enough to confuse and to trick a lot of the technicians that follow these things. And what happens is it only goes up by that small margin, enough so that everybody thinks it's going on to new highs and it's breaking out. Well, that's clearly not the case. So now we can have a look at the S&P 500, and we can see a similar pattern taking shape here where it's ran into some resistance here. You note the RSI is turning down. The MACD at the bottom here is also looking like it's about to turn negative. So there's a few factors at play here that tell me that we have indeed reached some resistance. Not to mention the fact that we've had a very strong rally from the middle of February, from the test of the low. And the next one we're going to look at is the NASDAQ composite. Similar thing, however, it didn't make it up quite to the descending trend line, which would have been expected. Now it's starting to weaken here. Notice that the last few days it had traded in a very narrow range, and then yesterday it traded in a wider range, and then today a bearish candle down on a lower close, down 1.1%, which is fairly significant. So I look for more weakness here. Now the Russell 2000, actually more pronounced weakness underway here. And once again, these indexes didn't make it up near their old highs of late last 2015, or the high range. There was much higher ranges in the earlier part of the year. So you can also see the 200-day average moving straight down. This is the 20-year Treasury Bond Fund, TLT. This is one where, as you can see, all during from the 1st of 2016, money moved into this instrument. And as of when the market tested its recent support there of around February 10th, 11th, money came out of TLT. Up until recently, the last day or two, you can see now there seems to be money coming back into TLC. You can also see that it formed a wedge pattern between February and the 10th of February and about the second week in March, which is a bullish consolidation pattern in my view. Now we'll look at the VXX. The VXX is a short-term index that reflects the VIX, which is the VIX, which is the Implied Volatility Index. Essentially what it is, it's almost like a fear index. You can see that it's very volatile. So from the support level of February 10th, this thing was trading up near 31, and it fell all the way down to about 1830, I believe, is as low as it got to yesterday after hours. Today it made a significant move up 4.64%. This thing is a very volatile, very good trading instrument. If you like to trade short term, nothing beats this. It's extremely violent. It can really move. So if one believes that the market has run into resistance here and is indeed going to be starting to move back down, which is what I believe is what's going to happen, but I think this VXX could head up in a very strong way. Now I have the price of gold, which has broken down technically from a higher range at 1283, which it hit a week and a half ago. I look for more weakness here in gold, as I've been calling. In my last video, I was saying that it was time to exit the gold positions, and this is pretty much what we're going to get now. Is we're going to get some weakness in the patch for a little while. The RSI, had been overbought at the 1283. It hadn't confirmed the higher high via the RSI. So now we have a bit of selling coming into the patch here, and I can see that there'd be some weakness coming in here. I still think 1166 is in the cards for gold. Newmont Mining, a very large miner out of the U.S. Same deal. This reflects the selling in the price of gold, and there's certainly money coming out of these golds. I mean, most of the amateurs were late coming to the party, and there was a lot of talk on the TV about how gold was the best performing asset in 2016, and of course those are all warning signals. Barrick Gold Toronto. I mean, Barrick has very good fundamentals. It hasn't yet really come down or really come off a lot from its highs, as some of the other ones have. But it has some room to fall here, and if one's patient, it can wait to pick up some Barrick at probably in between the 50 and 200 day average, which would be in between $12 and $16. So you could call it 14 if you're you want to put some limit order ins to pick it up down there around 14. That would be a pretty prudent move, I think, over the longer term. Goldcorp, same thing. It failed to take out its highs. It had the earnings that came out that caused it to gap down. It tried to recover back up. It's been struggling a bit here. It hasn't been really performing as well as the other golds. I look for Goldcorp to weaken down here a bit more, probably down to the 16-17 range. It'll be interesting to see as gold drops here, it gets down to 1170, 1160 area, maybe even 1150. It's going to be interesting to see how the gold stocks are trading at that juncture, to see if they're showing prolonged weakness or if they're starting to firm up. I believe they'll probably start to firm up as they're already discounting that drop in the price of gold. Detour Gold's another one. It doesn't come off a huge amount from its high range. It started selling off a little earlier than the other ones. That told me something was up, because Detour is very leveraged to the price of gold, and it's an excellent company. I mean, they've got a lot of resources and very low cost, good jurisdiction. But you can look to buy some more Detour down here a little bit lower, and I would definitely be doing that. Goldcorp. This is the AXR one that I mentioned in previous updates, where I'm feeling very strongly about it, even though it was down at 50 cents, even in the early part of the year when it was, not looking like it was going to take out the 65-cent range. But once it did, it wasted no time getting up to $1.10. Then it just, consolidated sideways there, and I actually bought it on Friday at $1.09 to $1.10, and sold it yesterday at about $1.42 on average. So it was just a quick trade, and I seen the breakout, and I just decided to move and get out of it, and I did, because of the perceived weakness coming up in the precious metals patch, which I believe Alexco will pretty much participate in that move down. And this is another one that you want to look to buy when it gets down to 70, 80 cents. I think you want to be taking a position in this. McEwen has not really given up a lot of ground here. It's in a very slight downtrend, sideways consolidation, if you will. I don't think there's a lot of downside with this name here. I think you might see it down around a deuce. You might. I don't know. It's hard to say. This is Rob McEwen, the guy that started Goldcorp. He's got a fine operation down there. He owns a lot of this company. It's not a widely held stock. Today it only traded 328,000 shares. I'm continuing to hold my position in this. I'm not going to sell it. IAMGOLD has weakened down from its high up around 375 and now it's trading at 268. We could look for IAMGOLD to get down a little bit more here, maybe 230, 240 range, and I think you want to be a buyer down here. I just wanted to show you a name, Tesla, which I think some put options should be bought on this name. It's grossly overvalued. Its price is way out of line with even the most insane earnings projections. It's just way overpriced, and there's way too much hype in the name. I think this makes a good short and a good to buy some put options on. I would go out, quite a ways, and I would take a strike price down at. I would be surprised to see it taken out its low of early February. So I would be, now that it's trading at 222, I would be buying put options that at 150, 140 that go at about 6 months, maybe a year, if you want to pay up a bit more for them, and just sit on them, because I think this thing could go down in a big way. It could give up 2/3 of its value in a nasty market sell-off. And don't be ever thinking that this market is not over on the downside. We're just getting into round 2. So that's our update for tonight. I just thought you might like to have a look at some indexes and have a broader understanding of how the indexes have rallied back from their nadirs and how everybody was scared in the second week of February, and a lot of people were calling for a crash and this and that, the other thing. And of course, the market does exactly what it always does best, and that's just do the exact opposite of what the mass media and what the public believes it will. Stay tuned. Thank you for listening.